We're going to get into some details now. We have Larry Shover. He's in the pits of the CME, which is just about to close. And our market panel, we have Greg Fisher, Gerstein Fisher, Chief Investment Officer, and Larry Haverty, Gabelli Multimedia Trust Associate Portfolio Manager. Larry, I want to start with you at the CME. It was very difficult to find any direction for this market today. What was moving it? Was it foreign, China, kind of a slowdown there, or was it news at home?
I think it was more news at home or the lack thereof. I mean, pay no attention to the column behind me. People are very anxious right now. It's like a holiday mode where people just do not know what to do. Keep in mind, David, we've lived through this crisis, calm crisis mentality for a long time. Traders right now are just waiting for the next shoe to drop, whatever that happens to be. We're all very, very anxious.
Okay, there's anxiety, but there's also some decent data, certainly, Larry, that continues to at least propel this market. So there is some reality here to the positivity.
Yeah, definitely. And I think the concern is that macro is failing to impress us. We need something else to pick up the baton
and
run with it.
And failing to impress us, we've had 6 record high closes.
Exactly, but I'm saying we need another metric to go beyond where we are right now. That's why we're seeing the lack of liquidity. We're not seeing a whole lot of volume right now, and correlations continue to go lower. I'm just saying, to make that next leg, something else has to pick up that baton. I'm hoping it's going to be growth metrics within the U.S., proving that we are near escape velocity in the U.S. economy.
Well, what about banks? We saw them down today, but they're going to be reporting their capital returns. Might that be the metric you're looking for?
It could be, and keep in mind, one reason banks have rallied so much, obviously, for the housing market, but also we've seen the 2-10 spreads widen about 40 basis points. That's helped banks quite a bit. So you take those two things into consideration, I think it's a great tailwind for the banking industry, one of my favorites for 2013.
Where was the trade today? I mean, you saw the dollar start to strengthen a little bit. I'm not sure if that really has much to do with what's going on, but gold suddenly perked its ears up.
It sure did, and I think when you look at all the commodities, whether it be oil, gold, aluminum, even zinc, they all rallied a little bit. I think a lot of that was on Goldman Sachs revisiting their commentary for 2013, just giving a lot of short covering, a lot of boost to macro traders who just want to get on board or at least cut their short exposure.
Larry Shover, we're going to see in a couple of minutes when the S&P futures close. Thanks, Larry. 30 seconds ago, the S&P futures closed. Let's go back to Larry Shover, the pits of the CME. Larry, any indication what's going to happen tomorrow?
Well, the indication is that we're probably going to have more of the same. We have a lot of growth metrics coming up, and I think people are going to keep their hands in their pocket until we see the direction of CPI, PPI, PMIs, etc. Pay very close attention. It's not too far away. April the 8th, the kickoff to the earnings season. So I think as we're up at this very lofty level, people are taking some exposure off to be safe, to see what the next narrative is going to hold for us.
All right, April 8th. Geez, seems like we just ended the earnings season.
I know.
Larry Shover, good to see you, my friend. Thank you very much.
Thank you.
We need to look at shares.